here I am. I hope you can hear me and see me 5x5, and that all is well. And yeah, hopefully things are going well where you are. It's Friday, so TGIF to all those who are quote unquote working for the weekend. If you know, you know. If you don't, you probably never had a job and you're spoiled. Or you couldn't have a job for some other reason, but most likely you're spoiled. So what is happening with Bitcoin and altcoins in the crypto space? Did you see what happened? Have you looked at the charts? Notice anything in particular that I've been telling you was happening for a while? Literally since about a month and 3 days, and I told you it could easily take a month or even longer. And I made all kinds of scribbles for you, just so you would see, even though you didn't need the scribbles because it was right there in front of your face to see, on the RMLRs, going up, down, or sideways. And I showed you exactly what it could do. And what did it do in the last month and 3 days on the daily time frame? Broadly speaking, what did it do? It went up and down and up and down and back up again. And what has it done now, which was in progress that whole time, which I told you about? Literally, I think every single day that I did a video about Bitcoin and trading in the last month. What did I tell you? Since that whole process began, what did I tell you? The mean reversion was in progress, right? And what did it do today? It completed that mean reversion. Pretty much in the same area, value-wise, where it began, right? Just above 100K, 101, something like that. Now, you're going to tell me, oh, you're just a lucky guess. Sure. Don't forget, I also told you at the time, right, that the range of that move could be anywhere from as very close to the third band down as possible. It could get to, right? It could get towards it, but not touch it, right? It would be very unlikely that it would touch it. And I also told you that the target for the mean reversion was the RMLR, whether it would be above, at, or below the current value. And you saw how at the beginning of the mean reversion progress, I told you, it's not the price of the RMLRs that we care about. It's the direction of the RMLRs. And every single day since then, the predicted direction of the RMLRs have been accurate. They just have been. So even though the price, if you would have attempted to predict the price of those RMLRs, you would have been wrong if you thought that it would be closing at around 120, 130,000 at this time. But the direction of the RMLR was exact. And what's more important is if you've been trading intraday, as in only using the daily time frame as a big picture guidepost and target, well, then you would have lots of opportunities to make more than just sit on a trade going sideways for a month. It went up, it went down, it went up, it went down, it went back up again. That's on the daily time frame. And every single day within those daily time frames, it went up and down a whole bunch. Just the other day, well, like earlier this week on Monday, right? It dropped like 3.5%, 4%, something like that, and then bounced back up like more than 5% in the next, within the next 12 hours or so, and then even more, a couple more percent on the next day, and it's since like Monday, it's gone up like 13% already, and that's just if you're being lazy and holding the asset from the beginning of that trade without taking profits along the way and stacking up more as it goes down and up, back down and back up again. Once again, the low time frame traders had the opportunity to stack more wins. Oh, but I wouldn't have gotten every bit of that move. Okay, well, first of all, you would probably, if you know how to trade the VEPs well, you could have. But more importantly, it's not about getting every bit of the move. And tell me, how much of every bit of the move do you get when you trade less often? You also don't get every bit of the move, right? Right. So if you can get not every bit of the move, let's say you're pretty good and you get, I don't know, let's say you get 80% of the move, okay? Whether you're trading once a week, once a month, or once an hour, or once every 10 minutes, or once every minute, right? Well, maybe don't trade once a minute unless you really know what you're doing and you have super fast computers and really big position sizes. Just because it's going to be hard for you to, you can trade on a 1 minute time frame, but that doesn't mean you trade every trade in 1 minute or less, right? Some trades will last longer than a minute. Unless you have an HFT company that you own and you can put on millions of dollars of capital on the crypto market spread across thousands of assets and just, run your bots on them as HFT firms do. But if you don't have that, you can trade on the 1 minute, like I said. But anyway, the point is, it doesn't matter how often you trade. Let's say you get 80% of your trades. Okay. If you get 80% of your trades, like of the movement, hell, say 60%. It doesn't matter, right? So you get 60% of the movement. And you only get that in one direction on one trade that lasts you a month. What is likely to rack you more Satoshis, more Bitcoins, more dollars, more whatever at the end of that trade? One movement that went up and down and up and down and up and down and up and down and up and essentially ended where it started in terms of the price of the asset, and you just stayed in the trade the whole time, and it seems as if the asset never went anywhere. Or, anywhere from 10 to 100 trades made in that month on the easy side, where every trade got you quarter point, half a point, 1 point. Do you see what I'm getting at? You don't see what I'm getting at? Right. It's all about the incremental wins, right? It's about building up the P&L with incremental wins. If you don't build up the P&L with incremental wins, if you're just going for the long, the big throw, you're trying to hit the home run every time, the grand slam, and then you fail to do so. First of all, not good for the noggin, okay? If all you try to do is hit it out of the park and you never accept that sometimes you're not going to hit it out of the park. The hitting it out of the park you will achieve by lots of little hits that you add up. And you're going to hit more hits, more hits, more hits, more hits, more hits. Like a machine. The home runs are the gravy. Right? If you try to hit a home run every single time, you're going to be disappointed. Right? You're going to get wrecked eventually. Because you will be taking positions you can't afford to lose to try to hit those home runs. Either you're going to have bad leverage on your positions, where you're going to be, you're just going to be in a situation where if you lose the trade, it's going to hurt you more than it should because you're trying to hit a home run. Maybe you're putting too much capital on the line. Now, if the information is telling you, hey, you should go to the upside, right? You want to call that your bias. It's really just your information, right? If you have a personal bias or even an intellectual bias or a quote-unquote professional bias as a trader, well, you should detach that from your brain, because having that bias is not going to help you. It's just not going to help you. Right? What is going to help you? What's going to be more useful to you? Having a bias that pollutes your way of thinking about a trade, or just letting the information inform you accurately, and you can rely on it, right? The vast, overwhelming majority of the time. You really can always rely on it, because if you look at all the information across the board, the only time that an asset doesn't do what you expect, pretty much, is when there is randomness that you were not calculating for. And that's normal, because that's exactly what randomness is. It's the things you're not calculating for that are affecting the market. Right? There's some, milkmaid in Holland who got lucky on the lottery, and she decides to put her euros into Bitcoin. There's some car mechanic in Austin figured, hey, today's my lucky day, I'm gonna put some money on this Satoshi stuff. Right? There's some guy in Germany who's like, my luck ran out today, I need to sell some Bitcoins to make my payment for my mansion. Well, you don't know, right? You don't know. And you can never know. And that's why all this nonsense about sentiment calculators, market sentiment calculators, they're complete BS. You cannot measure the sentiment of tens of millions, let alone hundreds of millions, let alone someday maybe billions of people, or hundreds of millions at least, who are buying and selling and transacting in a particular asset. It's just not feasible. You will never. What are you going to do? You're going to buy the Neuralink company and force everyone to get one, and make everybody have a little chip that reports to your trading exchange what they're thinking about Bitcoin, if they're thinking anything about it at all. And then you're going to figure out some math formula to calculate the actual sentiment of every living being on Earth, because they all have to have a Neuralink. Obviously, that's not going to happen. Right? To suggest it is nuts. I see you. What does it say? Such as. Don't think I'm saying such as. I'm saying such as. Yeah, you want to see some fog and a farm? Fog and farm. Farm fog. Yes. So the point is, don't think that you can trade market sentiment and news, because you can't. Bitcoin has delivered extremely good results. Great results, really. In just the last week. I'm sorry, but 13% from Monday's low to where it is now on Friday. That's fantastic. In a week. A week. Do you realize how many assets don't move 13%? Yes, of course, crypto, right, is more volatile. right, than traditional stuff relatively. ADA, Ripple, they've been both on a tear. And there's some nice setups in the crypto space. If you're looking at those assets in particular, if you know anything about me and my crypto take, you know there's this one thing I like to do with XRP. It's short it and then take profits. So it's been having a nice move to the upside. And when it's done moving to the upside, yeah, guess what is the only thing that I would be interested in doing with it? Yeah, shorting it and then taking profits. Yeah, there's targets. There's always targets, and they're always probabilistic and statistical, and they're always volatility targets and entropy targets, and that's how we know how to use them, right? There, we see with entropy if the asset is in a trending move or in a random walk. It's very simple. You see that with our entropy indicator. Most of the time, assets are on random walks. When they're not, they're in trending moves. Can you trade an asset in a trending move? Yeah, absolutely you can. It's kind of the whole point of the indicator. When it's in a trending move, it's go time. When it's in a random walk, you can still trade that. You just have to know how. You have to make sure that all the other information is lining up to tell you confluence, right? But you will very often find, it's not a coincidence, that the best moves happen at certain times on entropy, like when there's extreme entropy, extreme trending move or extreme random walk, right? Or the best moves, the beginning of or the finish of the move will often happen at those extremes. And then in the case of an extreme trend, when it fades off or spikes out, right? If it spikes out, it can end the move very quickly, usually. If it fades off, you can very much get a nice continuation. Even if it re-enters a random walk, it can stay in that continuation for a long while, which is, again, why you have to know all this stuff and be able to read it. Right? But the point is, if you know how to read the VEPs properly, it is a very powerful suite of information. I mean, why do you think that the companies that control the markets use the same kind of tools? They have their, whatever they call it, tools. They're looking at the same information. They might not call it a cool acronym like VEPs. They might have some other nickname for it. That doesn't matter. What matters is they're looking at the same highly relevant maths, right? They're looking at the means, the returns of investment. They're looking at the volatility, variance. They're looking at the entropy if they're one of the smarter firms. And they're looking at the probabilities and statistics. And they have different interfaces to look at this information. Sure, they have their own set of tools, but it's the same exact information. And they happen to be looking at it usually at an analysis of what's happening on much lower time frames. They're not calculating things at millionths of a second. Their computers are. They're looking at higher time frames, like we are, 15-minute, half-hour, 90-minute, whatever, daily. They're looking at all that stuff, 4-hour, weekly, right? But the computers are trading in millionths of a second. Well, how does that work? Well, it works because it works for the same reason that it works for us. The only difference is their position sizes, right? And their position in the order book, because they're literally co-located at the servers of the exchanges, like physically connected to them with a cable in the same location, one server next to the other. But information-wise, they're looking at the exact same information as we do. And that's it. All right. See you guys. Yeah, it's Friday, so tune into the Alpha Trading live stream. It starts at 11 a.m. U.S. Eastern Time. It's Friday, so that means it's Clown Show Friday. So should be fun. The Alpha Trading Discord is alphatradinghq.com/Discord. Go there, it's free. Check it out. Get your free access to the Volatility Starter Pack. Learn how to trade the VAPs. Once you learn how to use the free tools, you can get a taste of the paid tools completely for free with a 2-week free trial. And after you've done that, or even before you've done that, you can get access to the paid tools. It's dirt cheap for trading tools. It's like $100 and something a month. I don't even think it's $150 a month. I think it's less than $150 a month for like 40 different indicators that are all the best in the business. So there you go. If you know anybody who trades, tell them about alpha trading and our VEPS indicators, and pass them on this video. Okay. Meanwhile, like and follow and all that stuff, or subscribe. The algos apparently like it. Thanks. Happy trading.